think inflation is a bigger problem in the UK and probably in Europe than it is in other countries. You've got China is opening up after its COVID lockdowns. I think the UK is probably in for a harder landing than than Europe, and definitely a harder landing than the US.
Hey everyone, how's it going? My name is Conor Devine. You're listening to my podcast, Money and Plants. This is the show where I get to talk about some really big issues that affect your life and my life. In this episode of the show, it's number 48. I have an old friend of mine and he has been on the podcast a number of times over the last 2 years. I am speaking to Mr. Nick Leeson. Nick should be familiar to most people. He was probably infamously known as the guy who bust the Queen's Bank, Barings Bank, over 25 years ago, racking up losses of over £850 million. So given all of the, I suppose, the current situation that we face from an economic standpoint, the global economy is in a spin. Inflation is running at an all-time high. There is now talk of a looming recession. I thought, who better to speak to about all of this than Nick himself. He has been trading in the financial markets for over 30 years. He has been through a number of economic events. And I always like speaking to Nick because he's not your stereotypical investor or economist or trader. You know, he's quite a contrarian, so he doesn't run with the norm. He doesn't just say things that maybe the media or the Financial Times talk about. He's got his own mind and his own view on things. So in this conversation coming up, I speak to Nick about all of that and where he sees things going over the next sort of year or two. And then I also speak to him about the huge news in the last 7 to 10 days, the collapse of the currency exchange FTX. And the founder, Sam Brinkman-Fried, the young SBF, the young cool crypto entrepreneur who last Monday was worth $36 billion. And by Friday, he was worth zero. How did that all happen? And I asked Nick about that, about some of the similarities between what happened to SBF and FTX and what happened to him whenever he bust the Queen's Bank and was arrested, and he served time in prison. So that's a really, really interesting conversation. So look, if you're interested in economics, if you're interested in business, if you're interested in the housing market and where maybe interest rates are going to be in the next year or two, this is a conversation for you. Let's roll the tape and I'll do my normal summing up just after this conversation between myself and Mr. Nick Leeson of last week. Nick Leeson, good morning. How are you keeping? How are you? How have you been doing?
Yeah, good. Surviving.
How is Galway? How is the west of Ireland? Has things picked up?
Yeah, you see a lot of building at the moment, Conor, to be honest with you. Obviously much needed over the last few years. And, I think the city's getting ever closer to me out of my rural abode. It seems to be moving that way at the moment. But, yeah, no, it looks... I mean, obviously, we've got this backdrop of a possible recession. But I think people are reasonably upbeat at the moment.
That's good. Always good to hear Mr. Leeson's upbeat, and also interesting to see that the city of Galway is encroaching upon your huge estate with your horses and your Irish wolfhounds. I've been down to that estate. It's been quite a magnificent plot of ground you have there in Galway. So look, out of this podcast, I know we know each other. You've been on the show a lot of times, and I wanted to wait to speak to you actually because there's just so much going on right now. We've been sort of working together, I think 7 or 8 years off and on, which went so fast. But I was sort of thinking about this last night around, it's just in terms of the markets and the economy, and I'm an agent for the Bank of England. I was at their presentation last week, and they have a presentation to their agents every 3 months in Belfast, and it's really interesting. Actually, the last one I was at was 6 months ago, so the data there was a gap of 6 months, and it was interesting for me to see where the Bank of England see things over the next 3 years in terms of inflation and base rates, and I'm gonna ask you about some of that stuff. But in terms of economic events and crises, we had the Wall Street crash of 1929. Obviously, after the Second World War, things were ropey for a decade or more. We had the 70s, which was a challenging time globally, and then we had Black Monday, which is now you're sort of kicking in terms of your trading experience. 1987, October the 19th. I'm sure you remember it like yesterday. And then we had the .com crash in the 90s, the GFC in 2008. So this is now my era. I'm obviously a very young man, much younger than you. So I went through the GFC. And then we had the global pandemic then, with 2 years ago. We're just coming out of that. I'm interested in how you package that up, and then how you see, because you said something, we had a chat yesterday. You didn't sort of foresee things maybe as bad in the next 2 years as a lot of people are talking about. So I'm interested in how do you package the pandemic, the crash in the pandemic, alongside the other sort of big economic events of the last sort of 100 years?
Yeah, well, I think in simple terms, Conor, it's a bit like when you look at a property market. Markets overheat from time to time, and they need a correction. And so the big events that you've mentioned there have served as big corrections in the market. And what sometimes they allow people to do is to reinvest and get re-energized about the market. So I think you're seeing some of that at the moment, believe it or not. As bad as things look, I think when you talk about recession, when you talk about depression and things like that, unfortunately, as you know, as I know, it affects the people who have least the most. So, I think for a lot of people, there's a recession already. Things are very, very difficult. Commodity prices, as we know, over the last period, are going through the roof, and that's hitting really, really hard on the people that have the least in society. And the government obviously have come up with a couple of schemes that are supposed to address that. But I think, in my own summary would be that they're using very blunt instruments to do that, by giving everybody, a contribution to their electricity bills or whatever else they're doing in the UK and in Ireland. But it's quite clear that not everybody needs that, right? So they're not focusing on the people that really need the support at the moment. I saw a report in Ireland just a few weeks ago. Whoever made the comment, but if you don't need the money, then just give it back. Like, if anybody's going to give money back to the government, I'm going to be really, really surprised. And people are going to be paying this for years as well, because if you're going to run that sort of debt or that sort of program, it's got to be paid for, right? And it's going to only be paid for in taxes down the line. So I think there are ways that people are trying to address it. So I think, to answer your question, you have natural corrections in the market, and then sometimes you have these big sort of events that occur as well, that allow people to come back into the markets and reinvest. And you're seeing that at the moment, right? The UK, I think, if you look at the earnings potential for some of the companies there, it's probably one of the markets that's been really downtrodden over the last couple of years. And you're starting to see a lot of investment coming back into those UK companies. I think one of the downsides of that is that over time, you're going to see the control of some of these companies being lost to foreign investors, because they are cherry picking the type of companies that they want to get involved in. And I think there's some great companies in the UK. Earnings are strong, and that's why the markets are as buoyant as they are at the moment. And earnings are probably what drive the financial markets more than anything else. So you are seeing, like the Dow Jones is 6% off of its all-time record high, and then you've got a backdrop of a recession. So I think there was some inflation data out in the UK this morning, and it's particularly poor. Inflation is still going through the roof in the UK, but we're starting to see in the US that it's starting to cool down a bit because they've had very aggressive rate hike policy. You mentioned the 1970s. One of the things that happened in the 1970s when the US were raising rates is that they'd raise them, then they'd stop raising them, then they'd raise them again. And that stop-start policy probably prolonged or really prolonged the period of inflation and started the recession that occurred during that period. So this time they're being ultra aggressive and they're going to continue. And I think the US is probably headed for a soft landing. I think the UK and Ireland is probably headed for a recession, just because of the different approaches and the way that earnings are so robust in the US at the moment.
Yeah, so I was looking at my phone there. I was at this presentation last week up at the Stormont Hotel. The Bank of England gave the presentation to about 40 of us. And, I asked the question the last time I was at the presentation of the presenter was why does she think that, the Bank of England and central bankers seem to get everything wrong all of the time? Because whenever they were talking about inflation 2 years ago, me and you spoke about this. It was, transitory, or permanent, right? And one of the issues that I see, there's 9 people on the MPC, the Monetary Policy Committee. And, whenever I had Hugh Hendry on the podcast in July, he was scathing of central bankers, that they just crash the economy and they're unaccountable. And then there's Danny Blanchflower, who was Gordon Brown's economic advisor, who I know he sits to the left and on the political side of things, but he's absolutely scathing of central bankers. But one of the observations that I took and the question I put to the presenter last week then was, there seems to be a total focus and obsession is the right word from the Bank of England's perspective to get inflation down to 2%, right? And they actually modeled the graph. They showed us the graph whereby the Bank of England predict a 2-year recession. So that's very long. Recessions can last typically from 6 months to 2 years. So they're predicting this 2-year recession right up to the end of 2025. No growth. Unemployment sort of peaks at about 8% from about 3%. But it was interesting because they ran so base rate is really the monetary tool where they think if they put up interest rates, then inflation is going to fall back. So they're sort of saying that's demand-based inflation, whereas others are saying, well, it's not because it's energy inflation and it's external impacts on our economy, which is really causing all of these things. But what I said was whenever they raise interest rates, they're talking about raising the base rate to maybe about 5%, which is another 200 basis points in the next sort of 18 months. But they ran the model at keeping the base rate at 3%, which is what it is today. And that would get inflation down to about 4% in 2 years' time, right? As opposed to putting the base rate to maybe 5.5, and getting inflation down allegedly to 2%. So the question I had was, most people would accept inflation at 4% because it's 10 to 20% at the minute, depending on, if you do your own personal inflationary calculation, right? But there does seem to be, Nick, this obsession of getting inflation from whatever it is now to 2%. And they admitted to us that whatever that takes, which means unemployment, businesses going bust, people, mental health being destroyed, all of that. So that's called collateral damage. I'm interested in how you see what I've just said there. How do you think about that? Like this obsession with 2%, getting it down to 2%, and then the impact that's going to have, the catastrophic impact on people who live in the UK.
Yeah, it's a tough one, Conor, and I'm definitely not an economist, so I don't have the correct answer for you on why they're fixated on that 2% number. But it's not just the UK. The US is fixated on that 2% number as well. So everybody wants to get inflation down to that level.
Just to help you think about that then, because I asked one of the economists that was with me, Richard Ramsey from the Ulster Bank, said that it seems to be pegged to wages, because if inflation's running at 4 or 5%, then the public sector will demand 4 or 5% pay increases to keep up with inflation. Then it becomes political. So for me, I was going, right, I could connect the dots now and going, all right, so it's actually, so these central bank, it's a political vehicle. And we know that they try to say that they're not connected to politics. But to me then, Nick, that the penny dropped for me going, right, okay, I understand. because they can't give everybody in the NHS a 5% pay increase every year.
Exactly, and you're seeing some of those strikes occur already. There's unrest all over the place. I can't remember. The post office was on strike for a while. The NHS is striking. You've got rail disputes going on at the moment. So all of that infrastructure would start to come down. So that would probably make sense. And 2% is probably where that is pegged. Do we need to get down to 2% as quickly as possible? It seems to be the approach that they're taking globally. Not just in the UK, and that, as you said, it's going to lead to job losses. You're seeing that already with some of the tech companies, the growth companies who've overestimated in terms of their hire over the last period, and they're starting to shed companies or shed people at the moment. There will be companies going bust as well. The interest rates are going to drive some of that entrepreneurial spirit out of the market for a period of time because it's just going to be too costly. I remember that 1970s period. When I first got a mortgage, I think I was paying 16% on the money that was borrowed at that time. So it was a very, very challenging time for people. And like you say, I think mental health is going to be a huge issue. I think hopefully over the last number of years, people have got better at dealing with that. I know there's a long way to go with it. But I mean, it sounds like the logic you've just given there is the most appropriate. But yeah, could we survive at 3% for a period? I'm sure we could. Could we survive at 4% for a period? We could. But, you've also then got this balance that's going to occur. If the interest rates are too aggressive, you're not seeing that growth in the companies, you're not getting the earnings coming through as well. The UK is going to be less attractive to invest in for foreign investors, and there's a whole different there's a whole complete group of things that need to be looked at.
Just on the interest rates then, because today I think the typical 2-year mortgage fixed rate at the minute is about 6.5% in the UK. It's between 6 and 7%. Some are actually over 7%. And the challenge really then for the UK, and that includes Northern Ireland, is that in the next 12 months, for example, there's 2 million people coming out of mortgage products who have to remortgage into another product. I mean, that's catastrophic for those people, because in terms of, and this has been well documented in the US, not enough talked about in the UK and NI, but for those personal balance sheets, that's totally catastrophic, because people will be going from paying £700 a month to maybe £2,100 a month. It's a disaster. But it does seem that in the US and the UK that interest rates are on the rise. They're going to float in around 5 or 6%, more or less. But the difference that I only really twigged in me yesterday was that the European base rate is lower than the UK's and the US. And an economist I spoke to yesterday was basically saying, well, we don't expect in Ireland and in Europe the base rate to go anywhere near as high as the UK and the US. So we don't expect then mortgage rates to be as volatile. And that, to me, that was a sort of a dawning moment in my brain, because I never joined the dots that the ECB have 27 countries. It's politically fragmented. Italy's on the point of going bust again, seems to be every year. The Italians are struggling. So I'm interested in your thoughts around that, because obviously so this economist was arguing that he doesn't see prices falling, house prices falling in Ireland as much. In Northern Ireland, I think house prices could fall up to 30%. Okay, they're already fallen 10% in my experience in the last 6 months with what has happened. I think houses over 300,000, I think there's a big drop there. I think for first-time buyers and investor products sub 200, there'll still be activity there, but the market has slowed down considerably. So I think house prices are in danger of losing between 10 and 30%, depending on the particular house in the Northern Irish market. The economist I spoke to yesterday wasn't so sure that there would be as much a drop in the Republic of Ireland. And one of the reasons he said that was because he didn't see interest rates getting to the levels of the UK. What's your sort of thoughts on that, and the housing market in Ireland, house prices in Ireland? Do you see a big drop coming, interest rates? What do you think?
Yeah, well, I mean, it's probably more your area than mine. I mean, what you see locally is there's an awful lot of building going on at the moment, number one. So demand still outpaces supply in this country. So you've got a demand and supply type issue that's at play there. The last two rate increases by the ECB have both been 75 basis points. So surprisingly enough, they've been slightly more aggressive than the Bank of England, because I think the rate hike before or the previous rate hike to the last one was only 50 basis points. So the Bank of England definitely needs to be more aggressive. And there's no doubt about that after these inflation numbers came out today. So I think the ECB, like you said, because of the political landscape that exists there, they're not going to be as aggressive. But I think to date, they've been reasonably aggressive. I mean, my own mortgage has gone up considerably over the last couple of months. I think I've had 3 rate increases over the last three meetings or so. Hopefully it pauses for personal reasons. But yeah, no, I think the Bank of England definitely needs to do more. So I think you are going to see that imbalance. You know, and part of that is from leaving the eurozone as well. You know, and the decision now they have to control their own money and their own rate policy and their own inflation. And maybe that's proven a more difficult task than they would have expected.
David McWilliams is suggesting that there's maybe a 20% correction in house prices in the Republic of Ireland. We spoke about this a bit yesterday. Do you see that 20% drop in house prices in Ireland? Do you think they're building enough houses in the south to how do you see that?
I think I mean, they're definitely building more, and you can see that when, every time you go through Dublin, certainly around Galway, there's a lot of building going on. You've got issues with the amount of housing that's being handed over to the Ukrainians that need it, that are in this country, and rightly so. I think student accommodation is very sparse at the moment, and there's issues there. I think the way that you characterize it in terms of house prices, I think that the potential, who can buy a 350, 400,000 euro house in the Republic these days is limited in number. I see and you mentioned the small plot of land that I have in Galway, Conor, but houses close to us, they might have been sale agreed. They might have been sale agreed maybe 6 months ago, but the sales aren't going through. They're stalling. And you can see that there's a few more for sale boards going up around where I live. I don't really expect them to sell. So, I think in that sort of bracket, there is definitely going to be a pullback.
I think it's going to take about 6 months for the thing to sort of filter through. And I actually believe that it'll be 12 months from today that we'll be able to review the impact of the sort of change in interest rates and how that has impacted the housing market. Look, this is one of the reasons why I was really interested in speaking to you this morning. We have had another financial scandal. The FTX Sam Bankman-Fried scandal is all over the news. Story broke last Monday. Probably seen it around Tuesday time. Sort of been following it this last 7 to 10 days. I'm really excited actually about and I'm interested in who's going to play him in the film. The last scandal film that I watched was Rogue Trader. The one and only Ewan McGregor played yourself, obviously. They couldn't find anyone good enough looking to get, so it had to be McGregor. But look, I'm interested in this again. Here we go again, right? So I know it's a crypto company. It's a trading company. We're talking about billions. Last Monday, this guy was a 30-year-old. He was worth 36 billion. Today, he's worth 0, apparently. Look, FTX, it's a crypto exchange, right? I'm interested in, whenever you've seen that story breaking, I'm really interested in how what you started to think about. What are you thinking about Bankman-Fried, the son of 2 Stanford professors, big Democrat? I think he donated $40 million to the Democrats last year. He's a number of Joe Biden's personnel advising him. It seems to be deeply political. It stinks to high heavens, if you ask me. But I'm interested. What do you think about that?
Yeah, I mean, you probably know a little bit more about the story than I, but when you see the story breaking, you're not surprised. It's funny. I was watching CNBC this morning, and I caught the CEO of Binance talking. I think they're set up now in Abu Dhabi, and he was talking at a conference there. And rule 101 in banking, right, is you segregate your customer money and you reconcile your customer money. So you prove every day that, I've got Conor's and Nick's money and it's in a segregated banking account. And whatever happens to us, their money is safe. And, it's kind of strange listening to this guy this morning. Apologies, I don't know his name, but, they don't do that. And he said within the next 10 days, they will start doing that. When he first started out in the crypto world, they used to do it. There was a way that you could look at your hashtag, your hash, or whatever it's called, and you could see that money was actually included within the exchange. And I think what happened with this FTX scandal is that a lot of the money was being lent back out, or a lot of the
To the trading company was called Alameda Research, and it seemed to me that the money was going into FTX, and he was funneling that through to Alameda Research.
Yeah. I think that's a fairly, I think that's a safe assumption. The story has to completely come out, I suppose, and be investigated. But I think the way that I understood it this morning is that, and I know nothing about cryptos other than a very peripheral view and a strong opinion on it. But basically, you should be able to see that your hash, or whatever it's called, is actually included in the balance of the exchange, so that they're segregating that, and that that it's still there, right? And I think with what happened with FTX, my very brief and vague understanding of this is that he was then lending some of that back out to his own company. So if you did that reconciliation, Conor Devine's hash is no longer there, and you can work that out. So, like, this is just basic stuff, right? So you want to know if you've got money or you've got an asset, you want to know it's there, that it's safe, and nobody can get at it. And that hasn't existed, or certain companies in the crypto space, or certain exchanges in the crypto space do it. I think he mentioned two of the exchanges that do it. From a Binance perspective, he said that they will have it back fully operational within the next 10 days or so, and you will be able to perform this process. But that's just basic stuff, right? Like, this is as basic as it gets. And to, understand fully that, these simple procedures aren't in place, just reinforces to me that it's a bit like the Wild West, right? And now they're saying we want more regulation, and regulation, of course, will help that. But this sort of stuff should have been in place from the beginning. Blockchain is supposed to be, and again, like, I'm talking out of my left ear a little bit here. Blockchain was supposed to be these, it's supposed to be something that you couldn't manipulate or change. It was all supposed to be decentralized, and now there seems to be an acceptance that they need more regulation, that they need more help. You need trust, right? In any financial product, you need trust, you need confidence, and that's been eroded a little bit.
Yeah.
And I see in this, I saw again on CNBC this morning, one of the headlines that come up is one of the other exchanges is potentially in trouble this week. So it's having a knock-on effect. It's, if you get a knock-on confidence in any financial product, that can go to the nth degree. And it doesn't matter what that product is, right? It could be sterling. We saw a run on the currency years ago when George Soros was playing with that. Northern Rock, around the global financial crisis. If people get worried, you can get a bank run. So that can happen to anything. It doesn't matter what cryptocurrency it is. I mean, Bitcoin is the one that they say is a little bit aside of this. But, I'd dispute that. If you get a run on Bitcoin and everybody's trying to sell it, Bitcoin can go to zero. Why not? Anything can go to zero.
Yeah, but I think is the difference not that this is a crypto exchange where people are trading in bits and pieces. Bitcoin's an entity in itself. It's not an exchange. It's different. Like that, Bitcoin isn't crypto.
The reason why people use exchanges and you trade futures and options and you trade equities on an exchange is because you trust them, right? And they're protecting your money, they're protecting your investment, and this crypto exchange, and this isn't the first one of them to go bust.
Yeah,
right. There've been a few of them. So these crypto exchanges aren't protecting your money and or your investment, as far as I see it. They're not doing the simple things that they should be doing. Yes, they will be in 10 or 15 days' time, but that's not good enough. And and that for me, just going back to that thing about confidence and trust, it knocks that, unfortunately.
Right. So tell me this. So whenever you taking you back, sorry to do this, to your Bearings days, and whenever you wrote the note and then you absconded, and from my recollection of the story, you woke up the next day and your name was on television. You were the world's most wanted man. Was that within 24 hours?
Pretty much, yeah.
Right. Okay. So within 24 hours, and then you were arrested within what, 3 or 4 days?
Yeah.
Handcuffed, brought to where? Germany. So you were arrested, brought to Germany, world's most wanted man, and that was over 25 years ago. Your man Bankman-Fried is in the Bahamas, right? I see the US Council are thinking about having conversations and discussions with him around this. There doesn't seem to be any kind of urgency from law enforcement to arrest this man. Billions have vanished. How do you reconcile that? How come this guy hasn't been arrested? How come he's not sitting in custody? Like you were the world's most wanted man. It was all over the TV. You need to arrest this man. If you see him, he could be dangerous. I'm adding that bit in. But I'm wondering, do you know what I'm saying? Like there seems to be, it's as if, we'll speak to him. We'll see what happened here. There doesn't seem to be that urgency there to figure this out.
I'll tell you exactly what the reason is, right? Is they don't understand yet, right? So they don't really, to prosecute somebody, you have to find them guilty of a crime, right? So at the moment, there's a lot of supposition about what went on, and I'm sure a lot of it is very accurate. But like I remember when I was first arrested, the reason why I was arrested at first was for traveling on a false passport, which I wasn't doing. I wouldn't have known how to get one. So that was the original reason to arrest me in Germany, and then they came up with 7 charges of cheating, right, which is false accounting by a different definition, and that's right. So I never disputed it, but then 9 months later, maybe not 8 months later, I was extradited back to Singapore. And my first day in Singapore was explaining to the Commercial Affairs Department what I'd actually done and fleshing out my own charges. Mm-hmm. So, and that had taken 8 months, and they were still really no clearer to the detail, the granular detail of what was going to be done. And I was probably, I could have made myself a more difficult target by, now I was going back to Singapore, there's only one judge, you're not going to plead not guilty because he's still going to find you guilty. That's the way the country works. But in the US and the UK, they've got to prove that something has gone wrong. So I think at the beginning, or what you're seeing right now, and the Justice Department in the US is really good, right? They're a lot better than the UK, and they'll get to the point quicker than most people will. But once they zoom into the part where there's been a fraud, or there's been something criminal that's gone on within the organisation, and they've got to get themselves up to speed about what they're looking at, right? They're going to be a bit like me and be, what is this, and have to explain it and understand it first, and bring some experts in, possibly to help them, and that's the reason it's going to take a little bit of time. By which time your man will probably be in Montenegro or somewhere else where there's or where there's not an extradition treaty, or if he's not, that's where he should be heading right now.
I believe he's deleting tweets this past 3 or 4 days. It's all playing out. But look, that's been brilliant to catch up with you and get your thoughts on this stuff. It's an interesting time. So just to sum up, then, I mean, a lot of the more sort of economic sort of characters that I speak to who have a freedom to speak their mind are quite negative about the economy and the markets over the next 12 months. But you definitely don't seem to be as negative. You still think there's a fair bit of firepower out there, that you don't see this drastic downturn happening. Do you think it just might sort of fizzle out a little bit and then go again?
Yeah, well, I think it's going to be different in different locations. I think in the US it'll be in the US because partly because of the more aggressive policy, but probably more importantly because earnings are still robust. You know, Walmart and Home Depot both reported yesterday, both beat earnings. Their stocks were soaring yesterday. The forward guidance that they're offering is a little bit different. But you know, earnings are still really, really good in the US. I think inflation is a bigger problem in the UK and probably in Europe than it is in other countries. You've got China is opening up after its COVID lockdown, so that's going to benefit some countries as well. So I think you've got a harder. I think the UK potentially, and I don't want to forecast because I sound like an economist and I'm not. I think the UK is probably in for a harder landing than than Europe, and definitely a harder landing than the US.
Nice way to finish. It's fantastic to speak to you again, Nick. Looking forward to doing it again really soon. Have a great day.
All right, bye-bye.
Hey everyone, welcome back. I hope you enjoyed the conversation with Nick. Never a dull moment with Nick. He has a really interesting insight and perspective on these things. And I actually spoke to Nick last week and I asked him would he come back on the podcast, and we had a bit of a chat about where he's seen things. And I was very surprised because he's one of the first guys that I've spoken to in the last sort of 2 or 3 months who's a little more optimistic of where things might be going in the economy. And I suppose Nick's quite a private person. I definitely wouldn't describe him as an optimist. I think he's quite sober. When you speak to him, he's quite measured and very calm. And I was expecting him to have a much, I suppose, darker view of the economy and where things might be going. But he's quite upbeat about it. He thinks it's maybe a soft landing in the US. He does think that things might be a bit more challenging in the UK. And I thought it was really interesting, his take on the ECB, and the interest rates there may not go to as high as they are in the UK. And then that the impact then on the housing market in terms of house prices, the correction that's now taking effect in the housing market across Northern Ireland and further afield won't be as severe in the Republic of Ireland. So I thought that was really interesting. Always good to hear that there's more building going on in Galway as well, that the developers are out, that things seem to be moving forward. So in the round, I thought it was a really interesting conversation. I hope you got some value from it. You can follow Nick on LinkedIn. He's also on Twitter. If you haven't seen the film Rogue Trader, I would encourage you to watch it this weekend. Really interesting film, even though it is 25 years old. And look, I've learned an awful lot from the friendship that I have had with Nick over the years, and we work together as well in Dublin, and we still do a bit of work together. And I think it's, as a young entrepreneur and a young person evolving myself, I think I've really benefited from that friendship and that relationship. And I would like to thank Nick for coming back on and for sharing some of his ideas and thoughts about what the hell is going on right now. Look, if you like the podcast, I would love you to share it. This one's on YouTube as well. So go and watch it there. Also, give me some feedback. Feedback is really good. You can get me at Conor@conordevine.com, or also I'm on LinkedIn. I'm Twittering as well. And if you are interested in maybe my health journey, probably the best place to follow me is Instagram. So look, that's been episode 48. My name's Conor Devine. I hope you enjoyed the show. I look forward to speaking to you again very, very soon. Until then, look after each other and yourself. Have a great day.